Parliament has expressed confidence that the passage of the Development Finance Institution Bill 2020 will help strengthen the financial sector in the country. The law approved by the House will regulate the works of non-deposit-taking development financial institutions in the country. Parliamentary correspondent Joseph Opoku Gakpo joins me via Zoom for more on this. Gakpo, give us more details into what this bill seeks to do.
There are regulations and laws governing the operations of various banking institutions in the country, including the commercial banks, and even when it comes to the microfinance firms and all. Now, there's another bracket that they call the development finance institutions. And so here in Ghana, the indication is that there aren't a lot of them that are operating locally. On the international scene, you may refer to a number of them, including the African Development Bank and all, as development finance institutions. Here in Ghana, we don't have quite some of those institutions. So essentially, the rationale behind this particular bill that Parliament is passing is to create a conducive environment to allow for some of those development finance institutions that are not exactly deposit taking, but then they're able to raise resources from international organizations at fairly low interest rates and be able to get them out to people who want to invest in various areas, including agriculture, infrastructure, and some of those specific areas in order to advance the development of the country. And essentially, this bill that Parliament has passed will ensure that these said institutions get regulated going forward.
Okay, so regulation, one thing, but I'm sure a lot of people are wondering what specifically will change.
So the indication is that for a lot of those non-banking development finance institutions that are operating in the country, anytime they would want to undertake any specific activity in terms of transactions, or they need to get in money from outside the country and hand it over, they need to go to the Bank of Ghana for a specific kind of permit in order to be able to do that. But what will change is that once this law comes to being, there'll be the situation where the various processes in registering as operating development institutions will actually be done. And so when they need to do business, they don't have to go back to the Bank of Ghana every now and then for specific permit to undertake specific activities, so that then it smoothens their operations, so they're able to bring in more resources for big-time financial activities.
Sounds interesting, but when is implementation expected to begin, Gakpo?
So the indication is that this is something that is still at the level of the presidency. It's still not been signed by the president yet. We're waiting that the president will get this particular document signed after Parliament passed it, and then after that, then it becomes an act, and the Bank of Ghana will then roll out the necessary guidelines in order to get registered, and these institutions can then get into the space and start operating.
Thank you so much, Gakpo, for that update from Parliament. But Anthony Fa, who is a of Parliament's Finance Committee, joins us on phone for more on this very topic. Thanks so much for your time, sir.
Yeah, good evening.
All right, so first of all, I want to know what is the difference between development finance institutions and then the commercial banks that we all know?
Yeah, they are all financial institutions, except that the development financial institutions have a long-term view for development, whereas the universal banks, or what we call the commercial banks or deposit-taking institutions, would ordinarily do short-term, 2 years, 1 year, salary loans, the current accounts, savings accounts, and the kind of banking that we all are used to. These institutions are financial institutions that we can categorize as universal banks. In the case of the development banks, the focus, like I said, is for long term. And the whole idea is to enable even micro institutions, large corporates, medium-sized businesses, those that have developmental orientation, to be able to take long-term funding, such as 10-year facility, 15-year facility, so they can invest in industry, they can invest in agriculture on a big scale, they can do mortgages. If you took housing construction and the mortgage industry, for example, a typical borrower who wants to buy a house and is using a mortgage is going to pay between 10 and 20 years, maybe 25 years. Now, if the companies that are going to build these properties have to borrow from the commercial banks or the universal banks over 2 years, 1 year, 3 years, you realize that they're unable to develop the project, the properties, sell, have money and repay the funds back, usually within the 1 year or 2 years that they have the funding. So the clear difference is that the development financial institutions will not ordinarily take deposits like we and I open current accounts and savings accounts,
right?
But they will leverage on some guarantees that the governments of those nations will provide to them. They will leverage on that to borrow from offshore and have monies for longer tenure and also cheaper rates.
All right. Okay, so go ahead, sir.
On to customers through participating financial institutions.
Right. Do we have specific areas of the economy that these development finance institutions will be focusing on?
Yeah, I think it cuts across all the sectors, but primarily, if you look at Ghana and the media review, in fact, in the 2019 budget and the 2020 budget, the Minister of Finance talked about a development financial institution. He called that the Ghana Development Bank or Development Bank of Ghana. The name is yet to be finalized. But the creation of that bank is going to be a development bank. And yes, so the whole essence of this is that the funding, like I said, will be long-term, and the regulator will obviously be central bank.
All right. Okay, so you spoke about the development bank, the establishment of the development bank. How does that fit into the law, and what difference will the Development Bank of Ghana make in the country's development? Yeah,
the Bank of Ghana would have responsibility for licensing any institution, and I heard Joseph Gapo talk about it, that it's to attract investment into that sector, which is not properly developed in the country. Nigeria has done it, Singapore has done it, and the focus is on the private sector. In the case of Ghana, should we be successful with the establishment of the Ghana Development Bank, then they would ride on the back of the central government, raise funding, and then support various sectors. The sectors that have been identified in the budget, which could be expanded, it's not so exclusive, is, first of all, the agricultural sector, modernizing agriculture, and this will involve, for example, agro-processing. Then it will also help in the mortgage industry. I talked about the mortgage industry, particularly industrialization. And now that we are having the automobile industry taking roots in the country, these are large corporates that will depend on long-term funding at lower rates than they would ordinarily go to a commercial bank and borrow at 20% to finance projects that usually are not completed within a year or two, yet the loans have to be serviced. So the sectors are varied. Agriculture is primary, especially agro-processing, industrialization, and also the real estate or the mortgage market.
All right. Anthony Ifa, a member of Parliament's Finance Committee, we want to say a big thank you this evening for joining us. And that's how...